All right, let's talk Criteo. Their stock just had a fascinating day, and the story behind it isn't quite what you'd think. We're going to break down their Q3 2025 earnings and see what's really driving things here.
And when I say fascinating, I mean an 8.7% pop. The market clearly loves something they heard. So the big question is, what exactly drove that bullish sentiment? Because, spoiler alert, the outlook they gave wasn't exactly sunshine and rainbows.
So here's the puzzle, right? Criteo's stock takes off even though they gave a pretty weak forecast. What did the market see that the rest of us might have missed? It really comes down to this. Investors decided to look right past the short-term noise and focus on the bigger picture.
Okay, so let's dig into the headline numbers, and honestly, they delivered a super clean, powerful beat pretty much across the board. The big one to watch here is contribution ex-TAC. You can think of that as their gross profit. It was up a solid 8%, and that flowed right down to their adjusted EBITDA, which jumped a massive 28% year over year. That right there shows some serious operational leverage and a very profitable quarter.
And this really puts that outperformance into perspective. We're talking about an adjusted EPS of $1.31. I mean, look at that. It didn't just beat consensus, it absolutely crushed even the highest estimate out there by almost 40 cents. That's not just a beat, that's a statement, and it's exactly the kind of thing that gets investors really excited.
But, and this is a big but, here's where we get that narrative tension I was talking about. It's really a tale of two outlooks. On one hand, management's feeling so good they actually raised their full-year profit margin guidance to around 34%. Awesome, right? But then they turn around and guide for a soft Q4, forecasting a decline. So, what gives?
Well, management was pretty direct about this. They basically said, hey, don't panic. They attributed the weak Q4 forecast to temporary scope reductions with just that's right, two specific retail media clients. They framed it as a total one-off issue, not some new trend that's going to bleed into 2026. And clearly, the market believed them.
And this quote from the CEO, Michael Kosinski, really pivots the conversation. He's steering everyone away from that short-term guide and pointing towards the big strategic moves they're making. He's talking about performance media, retail media, and agentic AI, basically saying, hey look, our long-term strategy is working, and that's what you should be focusing on. Okay, now let's talk about a major catalyst that got the market's attention. This might look a little dry, but trust me, it's a huge deal for shareholders. They're simplifying their whole corporate structure. The plan is to eventually become a U.S. company listed directly on the NASDAQ. So why do we care? Well, this could open the door for Criteo to be included in major U.S. indexes, which would mean a whole new wave of potential investors and demand for the stock. It's a game changer.
And it's not just financial engineering either. Criteo is really executing on some key growth drivers. You've got major new partners like DoorDash and Sephora, and client retention is super strong. But the big one, the absolute headline here, is that they were named Google's first on-site retail media partner. That's massive. It unlocks access to search budgets, which is a whole new addressable market for them. Plus, they've been buying back their own stock, which is always a sign of confidence.
So what's powering all this? At its core, it's a clear focus on innovation. Management kept coming back to their investments in what they call agentic AI and their expansion into these high-growth channels like connected TV. The whole strategy is about future-proofing the business and making sure their technology is at the forefront of commerce.
So, let's step back. You weigh the incredibly strong execution this quarter against those temporary headwinds, and the market chose to focus on the execution and the long-term story. And you know what? We agree. That's why our rating on Criteo is outperform. All right, so here's our take on what happens next. For Q4, management set a pretty low bar, and frankly, we expect them to clear it. The real focus is going to be on the commentary for 2026. We think the stock will probably consolidate a bit and then grind higher as the market shifts its focus away from that Q4 softness and onto the big strategic catalysts, like the redomiciliation and that Google partnership. The core thesis here is really about a major strategic and structural inflection point. And of course, we have to close with this. Remember, this analysis is for informational purposes only. It is not financial advice.